Hey guys, what's going on? Welcome back to my YouTube channel. Now, something I really struggled with in the start of my career was understanding everything about central banks and actually how to use this to my advantage. So today I'm going to be speaking about the Bank of England and the Fed and how they've actually impacted markets this week. For several months now, the Fed have been waiting to start tapering. Now, if you don't know what tapering is, that is a reduction in their bond purchases. As it currently stands, they do have $120 billion per month, split $80 billion into treasuries and $40 billion into MBS. Now, that's mortgage-backed securities, just in case you didn't know. The only time they can start reducing this is once the economy is self-sustaining. So as we've seen retail sales, we've seen growth for the first 2 quarters of this year, we've seen inflation rapidly on the rise, and it's all about the rate of change. It's all about how fast something actually moves. So later this month, Jerome Powell, the Fed chairperson, has reiterated that the Fed will reduce their bond purchases by $15 billion per month. That will be split $10 billion into treasuries, $5 billion into mortgage-backed securities. That will leave their purchasing program at $105 billion per month. Now, if they do $15 billion per month, that takes us to the end of Q2 2022 for their purchasing program to be finished. Now, what that actually means for us is no stimulus will be provided, so the economy is then back, sustaining itself, and that's exactly what the Fed need. Now, if you're not aware, the Fed abide by a dual mandate. Now, the dual mandate is basically their job. They have 2 things to do: keep stable prices, which is stable inflation, which is the cost of basic goods and services to the consumer, as well as full employment. So maximum employment is very, very important. If people have jobs, they're gonna have money, they're gonna spend, that's gonna control inflation, and everything is just gonna rotate like a little bit of a snowball, right? In return, this has lifted the dollar, right? Markets are now eagerly anticipating the Fed back on their path of recovery, with possible rates rising as soon as July next year. This is in return lift the dollar back to 94.50 on the dollar index. So what I'm going to do is I'm going to break down a chart on the DXY and actually show you where I think the dollar is heading next. Right guys, so on the dollar index over here, we can see we have made headway into 94.50. Looking at this on the higher time frames, price is still extremely bullish. So now that the fact that the markets are pricing in all this optimism and all these expectations, what I'm going to do is draw a bit of a bullish fib on and notice how we have obviously come into that 61.8 and that 78.6 area. Looking at this on the weekly, price is still extremely bullish. We broke back above that all-important cycle level of 93.50, where we actually came back and retested twice for 2 trading weeks. Last trading week already printed that nice little bullish momentum over there. So that already gave us some headway for this week. This trading week, there again, if we just look at this, we made a new high last week. We had a higher low. We have now printed new weekly highs. As long as the weekly closes anything like it is right now, engulfing the 1, 2, 3, 4, 5 weeks, then weekly wicks, then I do see price at least heading into 95.50. With the Fed announcing their taper, it's very important to know that yes, this does show economic growth. This does show that the economy is in a position where they need less money, they need less assistance. So this is gonna push price a lot higher. Cool, now that the Fed's done, let's look at the BOE. BOE, pretty much a whitewash, right? For the past 3 weeks now, the markets have been eagerly anticipating a reaction from the Bank of England, which... What's going on? You good? How you doing? Cool. Brush the Fed aside. Bank of England, pretty much a whitewash in my opinion. Now, we have seen the rate of change in inflation the past 4 or 5 months absolutely skyrocket. Now, it's not about what something is, but it's about how fast it actually changes. So the BOE had a target of 3% for inflation, and we're currently sitting at 3.2. So now just think about that for a second. If you haven't received more than a 3.2% rise in your wages the past year, guess what? You haven't received a pay rise. You've technically received a pay cut. Now, with inflation the way it is, with our vaccination rollout as good as it has been, we need to now think to ourselves that the economy is self-sustaining. We have had this massive growth that we've seen over the past year. Several members of the Bank of England have thought, you know what? Is it a time to raise rates? Is that the only way we can fight inflation? So, markets eagerly anticipating that, eagerly pricing that in. We saw the pound rally against the dollar, against the yen, Aussie, pretty much against all crosses. So, markets move on expectations. And something that we need to understand is, if that expectation gets unwound, the currency is massively going to get hit. So the Bank of England had their interest rate decision yesterday, priced in at 0.1%, but markets were expecting a 0.15% raise in interest rates. So that's a 15 basis point rate hike. However, that was eagerly unwound. 3 members pre the event were obviously looking for a hike, with 6 members looking to keep rates the same. However, that was unwound by 7 members voting to keep rates the same, with Bank of England Governor Bailey reiterating that we're not ready. The Bank of England is simply not ready. Now, the fact that all that optimism that was priced in got very quickly unwound, the pound took a beating. Across the board against dollar, yen, and Aussie. So that's something I'm going to break down on the charts with you right now. And yeah, let me know what you think. Right, guys, so looking at GBP USD over here, the biggest movers so far this week. Price has been trending nicely to the downside. Let's get rid of this fib for a second. Has been trending nicely to the downside with 1, 2, 3 swings into the high. Something that is very relevant for me is the fact that price has not printed, let's get rid of my crosshair. Price has not printed new monthly highs since June, right? Lower high, lower high, lower high, lower high, and there again once again a new lower high. We have now printed a new monthly low, which I do expect price to actually continue a lot lower. One of the main reasons why we were trading up at these highs was the optimism around the vaccination rollout, coming out of lockdown, and actually taking action on our monetary policy, which has been unwound. So looking at this on the daily, we can obviously see all these lows were breached, right? So that does give us confidence for our fib from the high to the low. And we have come back into that 61.8 and that 78.6 region. Guys, this is the same method I used on GJ. It really works. So the fact that all these lows have been breached, you're looking for the highest place to sell to ride the wave in that direction. Dropping down then to the 4-hour price, what has been swinging to the downside, giving us lower lows and lower highs. Price has currently printed a new low in terms of this wave. My next sort of point of call for this pair is definitely going to be 133, 132.50 over the next couple of weeks. Is there an opportunity to short on this right now? No, price has been and gone. However, if there is any sort of correction, possibly into the new week, into 136, then I'm happy to actually jump on the bandwagon. Why I like this so much, and I do expect cable to be the highest probability to be trading a lot lower, is purely down to the fact that we had that hawkish Fed and we have that dovish BOE, so that gives us a nice little double whammy to sell cable. So just as a glossary to summarize everything I've just spoken about, hawkish being what the Federal Reserve have done right now, optimistic, using optimistic language, reiterating that everything is good, everything's going well. Dovish being what the Bank of England have done, reiterating their fears and their concerns, not actually acting on what is expected. So we can obviously see how hawkish optimism has priced into the dollar, and that dovish sentiment from the Bank of England has given us a bearish pound. And to reiterate, markets move on expectations, right? If there's any outliers of those expectations, that's what actually drives price action. So we have seen that strong dollar, we have seen that soft pound. This is more than likely going to continue for the next 3 or 4 weeks. So I probably do see my targets that I mentioned in my screen recording get hit. So I hope you enjoyed this video. Like, share, comment, subscribe. Let me know what you think. Do you want more videos like this? And I'll see you guys in the next video. Now, if they do $15, what's going on? You good?